Goldman re-raises to 3,700 with views of 4,500. Goldman Sachs has upgraded its 2025 year-end gold forecast from 3,300 to 3,400 per ounce, reflecting what it sees as a structural realignment of demand across three axes. The bank's re-raise results in a material upward revision with surprises for several of those factors assessed in isolation, as well as one low probability but plausible tail risk scenario that combines all three in a perfect storm.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and this is the Goldfix Market Rundown, Tuesday. Today we have two stories for you, two topics. The first one is a Goldman Sachs report came out recently. Goldman re-raises its price target to 3,700 with views or aspirations on 4,500. I'm going to touch on that and let you know how to read more. The second topic is a news item that came out a couple of days ago involving India's desire to buy American gold and silver. And that is a news story, but we have a little bit of an editorial title. And our title is The USA Goes from World Leader to Ripe for Looting. We'll touch on both of those as well as the markets and the news items. 10-year yields are 437, unchanged. The dollar is 99.80, up 16. The S&P 500 is 53.90, minus 6. The VIX is 31.10, up 22, up 22 basis points. Gold is 32.19, up 9, off its highs. Silver is 32.25, down 9, pretty close to its lows, I think. Copper, 455, leading lower today. WTI, 61.17, down 53. Natural gas, 325, down 7. Bitcoin, 85 spot 500, up 1,000. Palladium, 960, up 9. Platinum, 960, up 8. And they're neck and neck again. Gold, silver under 100 at 99.75. Soybeans 1026 minus 8. Corn 481 unchanged bid. Wheat 556 and change down 2. Okay, looking at that board, taking it together, there's two things that are going through the market. There's basically three drivers in the market right now and a very big macro indicator. The first is we've just had a torrid risk assessment in the markets. So that makes any correlations that remain in this world a little bit disjointed first. Second, the market is starting to breathe a potential sigh of relief based on what President Trump did yesterday. And as a result of that, you're seeing gyrations as people square up positions for what either they think will happen next or licking their wounds and closing positions as to what happened last. So with that in mind, copper, which ripped higher, is now ripping lower. Silver is relatively stable, and gold is up $9. The easiest one to understand is gold. Gold is up $10. Yesterday's move could have been a lot lower given that the VIX was weaker. There are just people out there that are looking for excuses to buy gold still, and we're going to get into that in a second. There's the home page. Three popular and relevant stories to our industry yesterday. We put out a mini podcast, Why is China Buying Gold Under the Radar? There's a not very popular, but I would say very interesting graphic out there of gold purchases by China, publicly and privately. You may see it on a Zero Hedge story, premium story from time to time. We dissect it and break it down for those that are interested in learning more about this chart and what it implies for China's demand and how they buy. Top left-hand side, why China's insurance pilot plan is really a mandate. That's our opinion, but we're right. China's insurance buying of 1% isn't a suggestion, it's a mandate. And we go into why that is. American gold is German gold. There you have it. All right. Where are we? All right, we'll do that. Let's do this first. Let's get to the main stories first. All right. Goldman re-raises to 3,700 with views of 4,500. Goldman Sachs has upgraded its 2025 year-end gold forecast from 3,300 to 3,400 per ounce, reflecting what it sees as a structural realignment of demand across three axes: central bank accumulation, ETF inflows linked to rising recession probability, and investor positioning driven by more macro volatility. The bank's re-raise results in a material upward revision with surprises for several of those factors assessed in isolation, as well as one low probability but plausible tail risk scenario. We have that footnoted here for you that combines all three in a perfect storm. And there's our graphic showing their breakdown of different scenarios. You can read that whole story in Goldman re-raises to 3,700 with views of 4,500. Next, the USA from world leader to ripe for looting. The Hindustan Times reported a day or two ago that India is weighing the import of gold, silver, and other precious metals from the United States as part of a broader strategy to narrow its bilateral trade deficit. According to sources familiar with the negotiations, the idea is being explored under the ongoing bilateral trade agreement discussions, which aim to integrate supply chains and introduce concessional duties on high-value trade items. Before I get into my implications of this, that means the India and US trade agreement is being discussed right now. And we are seeking, as part of whatever these tariff negotiations are, to reduce our deficit with them. And both countries are looking for things they could buy from us. And so far, they've settled on silver and gold. Now, if you see the phrase there, it's being discussed, that means it's being done. Okay? Which I will not get into now, but I will just leave this out there. The EFP in silver and gold, primarily in easier to see in silver, has gone backwardated again, which historically means more demand in the continent than in the US. And there are multiple reasons for that. And I've had a discussion with Bob Coleman about it, who constantly polices this and makes his followers aware of it. I'd recommend you follow him. The EFP changing is a sign of, as I said, continental demand or European demand. But is it demand in Europe or is it demand coming through Europe headed to the subcontinent? And I would put it to you that the EFP is explained by this article. And the article basically says that India, well, the EFP says that someone is buying silver and gold again from destined for England. And the last time we saw that was 2022 when India was buying a lot of silver, something that Bob and I also saw back then. All right, implications of this. Number one, this is about 5 points I have on this. Number one, India seeks to rebalance trade by buying U.S. goods. The only U.S. good it's interested in is a commodity. That implies we don't make anything they want to buy. I'm going to leave it at that because it gets more depressing after that. But there's a chart showing the imbalance. The light blue is what they buy, the dark blue is what they sell, and the red line, I'll make it a little bit bigger if I can. The red line is technical difficulties. All right, we'll stay here. The red line is the difference, and it errs to the side of purchases as opposed to sales. Moving on, markets recap. U.S. stocks ended higher after the White House exempted smartphones and computers from new tariffs. In Canada, Canada's main stock index rose with broad-based gains. Now, yesterday was a very volatile day, even though the market was unchanged, so to speak. There was a lot going on under the surface. Particular stocks were having their own reasons for moves. So I wouldn't just take the broad-based gains as the only thing to read. Market news, we'd like to touch on that today. Bank of Canada is more likely to halt interest rate cuts after a tariff pause. Tech and auto shares gained on Trump as Trump floats more tariff exemptions amid confusion. Uh, Goldman Sachs beats estimates as traders ride volatile markets. Yeah, that would be gold. Okay. I'm not saying that's the only thing they trade, but Goldman Sachs is not short gold. They're not a bullion bank that has a swap desk that's making markets. They're a bullion bank that's front running swap desks that are making markets. All right. NVIDIA to produce AI servers worth up to 500 billion in US over 4 years. We'll see about that after China releases whatever their next deep seek product is. Katy Perry launches into space with all-female crew on a Blue Origin rocket. Unfortunately, she returned. Just kidding. But we have the full stories on that at the bottom. You could say this from the Blue Origin that the world now sees top-line growth in space tourism. And she's basically just a paid influencer. However, that's where it is. That's where your growth's going to be. Next up, data on deck. Tuesday import price index at 8:30. That may be out by the time you see this. Right. In premium, we have the daily news stories that we just described to you. And well, I'm going to save the EFP conversation for another time. But that's it. Let's take a look at the markets. A quick look at the charts. It's pretty busy. There we go. We'll just make it one chart today. Make it a little bit easier on our eyes. And we're going to go with the daily. I feel like that painter guy. All right, so if you're a bull in gold, you're looking at that saying that's a bull flag forming. We'll see. That remains to be seen. Silver. Well, silver is patterning itself after stocks right now, which is fine, but gold keeps it higher. It's dangerous to short silver right now. If you're bearish copper and you're bullish gold, people would, as we've said here a million times, people would buy gold because they're worried about one thing and sell silver because they're worried about the economy. Well, that's becoming a very dangerous thing, especially if countries like India are seeking to neutralize their trade surplus by buying, quote, high value goods. And silver is the high value good to buy. It costs a lot. It gets a lot of trade deficit money out of the way. And not only is it precious, but it's industrially used. So my point is, shorting silver as a hedge for the economy is really not a good play anymore. My opinion, we'll see how that goes. WTI is lower. Well, that's it. That's it. That should be enough for now. Everyone have a great day. I'm Vince. See you tomorrow.
Well, thank you, Vince, for this morning's Markets and Metals. Sure hope you enjoyed that one at home and appreciate you being here. Hopefully it was a great start to your day. And before we wrap up, did just want to pass along some news out from Fortuna Mining yesterday, as they have completed the sale of their San Jose mine, where they had reached the end of their reserves. They did have a sale in place earlier this year that was terminated, although they have completed a new sale for that asset, where they received $6.5 million in cash, a payment of $1.2 million for prepaid working capital, the right to receive up to $8.3 million upon the completion of certain conditions, and they also retain a 1% net smelter royalty, payable after the first 6.1 million ounces of silver and the first 44,000 ounces of gold. And the link to this press release in the description field below. But an active few days for Fortuna, as they also did announce the sale of their Yaramoko mine on Friday. And to find out a little bit more about that, I did check in with our dear friend Dave Kranzler, and to hear what he had to say about that deal, we'll just click on the video coming your way now.